Mega exclusive with none other than Nayantara Rai, my colleague. Remember, she was the one who told you just last week that the Finance Ministry as well as the PMO are taking active steps, and it seems that something is in the works for that surcharge on FPI. And now Nayantara is here with yet another mega exclusive. Nayantara, seems that the Finance Ministry is now working by the minute when it comes to working on the capital market selling.
This is a mega ET9 exclusive. Last Friday, we told you the Prime Minister's office was disturbed by the massive sell-off in the markets and once a vibrant markets and the damage that has been done by that FPI surcharge. And it's post that North Block has had no choice but to start working on rolling back the FPI surcharge. But ladies and gentlemen, it doesn't just stop at that. The big message that has come in to the Prime Minister's office as well as to the Finance Ministry is rolling back a measure which should have never been introduced is not going to be good enough. It's not going to cut it for the domestic investors as well as the foreign investors. Something big is needed. Something out of the box, something extraordinary is needed to ensure that investors are brought back to Dalal Street. And this is what we are understanding from our sources, that a mega package is in the works to boost confidence for investors. They realize that just rolling back a big mistake may not be enough. There are already questions being asked that you had to see $200 billion of market capitalization being eroded to bring back to roll back something that should have been introduced. So this is the big news. The package which could look at the long-term capital gains tax. Remember, this has been one sore point for all investors. What we are understanding from our sources is that they are studying the implications of removing long-term capital gains tax after a 3-year holding period. This is what we are understanding. This will obviously have to be prospective in nature, but long-term capital gains tax, a massive sore point. Is that set to go? The revenue implications being considered, but the way the markets have been behaving, I think it's safe to say that perhaps the revenue implications are not really going to be large. This is a mega ET now exclusive. It's not just long-term capital gains tax. Even the tax on dividends is being studied. It is being analyzed. How to bring back investors. The DDT has been a sore issue. That is being considered. What kind of a tax relief can be provided to investors as far as dividends go? After this super rich tax surcharge was introduced, there was a massive arbitrage going up to almost 14% between mutual funds and AIFs, alternative investment funds. That is also being reconsidered. It's being studied on how to remove that arbitrage. I believe my managing editor Nikunj Dalmia is joining in with the editor's take. Nikunj, is the mega ET now exclusive.
You know, Nayantara, this is a great story, and from a market standpoint, this is like a fairy tale kind of a day, because first, our story which was broken last Friday on the FPI rollback, that in a sense is almost officially confirmed, and now we've got an extension to that. Now, Nayantara, what market men don't like, or what nobody likes, is to pay additional taxes. In 2018, the definition of long term was changed, and the definition of long term was that if you're holding stock beyond 1 year, you have to pay 10% tax. If the definition of long term changes from 1 year to 3 years, the government is trying to indicate and suggest and signal that if you're a genuine long-term investor, India will welcome you. If you're a genuine long-term investor and you've got a time horizon beyond 3 years, and if you're investing in equities, you will pay no returns. You will pay no taxes. What this would do, this would change the forward rate of assumption for the market. B, this will change the discounting rate, and this will have implications and impact on the way how you would be valuing stocks. If your projected future return changes, this automatically will add up to the valuation multiples, and the demand for Indian equities will go strong. Also bear in mind that in order to, not only the economy needs a vibrant market, the government also needs a vibrant market. There's disinvestment. There are plans to take companies public. There are plans to use the capital market for a lot of other funding needs. So Indian government, Indian economy, Indian investors, they need a vibrant capital market. And for capital market to become vibrant, you have to keep taxes low and you have to get growth back. Growth is something which could be a natural phenomenon, but taxes is something, if you address them immediately, it surely will have impact on the sentiment. Now, India for the longest time has enjoyed certain tax benefits on long-term taxation. They were taken away after the 2008 stupendous stock market rise, but now I think if they have been rolled back again, and I think to be fair, if it goes from 1 to 3, that should be a delight for a lot of investors, and especially for mutual fund investors, Nayantara, Aisha and Abha, because a lot of mutual fund investment is coming via the SIP route. So nobody talks months there. Everybody is talking about years and decades there.